Thanks for clicking. The Canadian Real Estate Association, the CREA, has just released Canada's real estate data for the month of October, showing a continual slowdown in sales and prices.
The market's in an itsy-bitsy little gully right now.
And CREA economist Sean Cathcart spoke about the apparent lack of demand in his monthly interview, echoing that of CREA President Larry CREA, saying that buyers have gone into winter hibernation. As we'll see, even Cathcart, ever the optimist, put it nicely, says that the biggest question now is whether or not buyers will return to the spring market. So what I want to do today is go over Canada's real estate data for the month of October, take a look at Sean Cathcart's monthly interview, discuss current uncertainties in the market, and then discuss some implications going forward. As we'll see today, the future of the real estate market depends largely on what the Bank of Canada does going forward, and that'll be largely dependent on the CPI data that we have coming out next week. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home, which represents the most popular set of features. The benchmark fell in October. The benchmark was sitting at $751,700 in September and dropped down to $745,800 in October. So that's a nearly $6,000 drop in the benchmark price, which is now sitting at its lowest point since it was in June, erasing all of the gains made during the summer. The average price, however, was up, though marginally. The average price in September was sitting at $655,803 and rose slightly to $656,625. So that's about an $800 gain in October, or as the Toronto Star put it, average prices rise as sales slow.
You'll know that when you need to know that.
Excellent.
And, indeed, sales have slowed, with the sales to new listing ratio now sitting at 49.5%, a 10-year low, compared with the 51.6% that it was sitting at the same point in time last year. So, out of all of the new listings that are coming to the market, less than half of them are selling. The CREA only provides the public with the data for the past 5 years, but we can see that the only other times that the SNLR was even close to this low was in June of 2022 and pre-2020, also back when rates were relatively elevated. And even the CREA's economist Sean Cathcart noted the major drop that we're seeing in the SNLR.
We had a tight sales to new listings ratio of about 70% just 6 months ago, and it's at 50% now. Now, that's still okay. That's still what would be considered in the balanced range, but we don't want to see it continue to fall too much more.
I'm sorry, who is we?
Indeed, where you sit is where you stand. So, we have the benchmark price falling almost as much as it did last October. The average price is up about $800, and the sales to new listing ratio is plummeting. We're seeing a major increase in supply without a corresponding increase in demand. With all this in mind, all things being equal, prices should continue to drop over the coming few months. We have much more supply than we did last year, and demand is much lower. And last year, between November and February, we saw Canada's benchmark price drop about $22,000. And on this, a brief side note, if prices are going to continue to drop, make sure you have those finance conditions in. If your realtor does not want to include a finance condition, get a realtor who will.
Stop saying that!
So, it looks like prices are going to continue to drop with so much more supply than we have demand. But what happens once we hit the spring market? For his part, Cathcart said that if we do get to the spring market and buyers jump off the sidelines, jump back into the market, they'll be jumping back into a market that has much more inventory, which should help keep a lid on prices.
The rebound in activity this past spring was a good example of what we might see next year. Were that to happen on some level, it would be into a market with more inventory this time, which would mean more people buying and selling homes and less pressure on prices. That's a good thing.
I want him fired.
Yeah, Cathcart's come a long way, which was even more evident when he was discussing the uncertainty going into the 2024 market.
The extent to which that demand comes off the sidelines again, or doesn't, next spring, will really come down to whether the Bank of Canada has to raise interest rates again between then and now.
That's certainly a departure from the Cathcart we saw heading into 2023's market.
We know the demographics are off the charts, more so than ever before. The Bank of Canada is increasingly signaling that rates are now at the top.
So, in a major departure from last February, the CREA is now admitting that demand for a thing is determined not only by the want, but also by the ability to buy that thing.
Gosh, thank you.
They do fall short on saying what that lack of demand will do to prices during the winter market, but baby steps. So we have the benchmark price down $6,000, the average price up $800, and a sales to new listing ratio at a 10-year low, meaning much more supply available than there is demand. And even the CREA noting the extent to which the next 6 months are uncertain. And I think that uncertainty is going to be the story of the day going forward. Bond markets, right now, are extremely volatile, with yields on 5-year government bonds plummeting on Tuesday on the news that U.S. core inflation came in 0.1% lower than had been expected. However, yields shot back up almost 10 basis points the following day on the news that U.S. retail sales were higher than expected. Fixed mortgage rates are falling on declining yields, though not as much as many would have expected, as the U.S. Treasury market continues to remain highly volatile. Given all of this volatility, no one, and I mean no one, knows where this market is heading over the next 6 months.
Except I do.
No one knows what the Bank of Canada is going to do over the next 6 months, where bond yields are going to land, and, probably more importantly, whether or not the U.S. is going to be able to keep borrowing costs under control. All things being equal, heading into the winter market with the highest level of supply relative to demand that we've had in 10 years, we should continue to see prices to drop during the winter market. Heading into the spring market, we just don't know. We just don't have the data as of yet. We have very early signs of a slowing inflation rate, but as we've seen, that can change very quickly. With that said, we will have an update out on Canada's inflation data next Tuesday when it's released by Stats Canada. Click like and subscribe if you want to get those updates, but for now, thanks so much